Hi there. Hedera is up by about 2% this week. However, if we look at the chart, it seems like it's being suppressed under the red key level of 10 cents. But diving deeper into the daily chart tells us a very different story, especially today. So let's dive in and see what's actually going on, and there may be whales that has gone in. If you're new to my sessions, I'll cover the Wyckoff stage, potential trend change, as well as key price levels. These are education content, not financial advice. The weekly chart is showing us the thing that I said in the beginning, rejections from above the red key level. Currently, there are still about 25 hours for this week's candle to develop, but the price, as of this moment, is staying around the 10-cent level. It has slightly gone up compared to the past few weeks, but it's still range bound between the purple key level and the red key level. Things may change, especially when we look at these volumes. This is a very strong support, the purple line, and then subsequently still higher than average volume, and this week, even higher than 2 weeks ago. The drop last week, the volume was very low. So all these are indications that Hedera may be building towards a sign of strength stage. In Wyckoff, that means the price comes up to re-challenge the trading range top set by the previous automatic rally. This AR means automatic rally. Okay, that's somewhere between the yellow key level of 0.192 and the green key level of 0.145. Look at this wick, this candle over here. If that's the case, from this point to 145, in simple terms, that's like around 45% increase. But remember, a sign of strength doesn't mean it leads all the way to the next distribution peak. Sometimes the retracement can go very deep or even deeper than the previous test. Okay? So, when I said in the beginning that there's something interesting showing up in the weekly and the daily chart, having this, remember this backdrop over here, this lick that may happen. When we look at the daily chart, even though we are not yet close to the mid of March, we're getting into March, there is a chance for this uptrend to continue to break outside of the downtrend, this downtrend that started way back last year in July. Okay, before the mid of March comes. The reason, if we look at the volume today, when news came out that US and Israel is striking Iran, maybe that's when a bunch of people sold. But this volume looks like that there are whales that came in and absorbed those volume. All right? That amount of volume, it won't be for small fishes. Okay? So, when the economic data comes out in March, that may be a catalyst for the price to change direction. Okay? If they play the news as if it's good news for liquidity and risky assets, that's going to push the price to go outside of the downtrend potentially. However, if they play the news as if it's like end of the world or that's for liquidity or risky assets, that's potentially another wrong for the whales to get in. Reason, because they are using the news to check out the paper hands. And by observing the volume, we know whether they have gone in, combined with the news that's playing out. War breaking out, people selling at a certain point, but the price gone back to a pretty high level to the support. That is not a normal move. Okay, you would have assumed that we see a red candle going down, but that's definitely not the case. And with this volume, that's crazy. Okay? Looking at this line over here, assuming it's going to continue to go upwards, is pointing very close depending on whether you use the wick or use the candle body, is pointing to exactly this cross section over here. Okay, this wedge over here. So keep a close eye what's going to happen in the next couple of days, especially the development in the Middle East as well as the economic data that comes out from the US. That is going to turn the tide. If you're interested to access these sessions 2 days earlier, join the other members now. Here's another video for you. Thank you.